Hi everyone, and welcome to this week's Maqro Minutes. I'm Tim, and I'm joined today by Rob Collette, the CEO here at Maqro. How are you this afternoon, Rob?
I'm good, thanks, Tim. Thanks for having me.
No, that's okay. So this is going to be our first Maqro Minutes that we've ever done, so bear with us. For those of you who are joining us for the first time, welcome to Maqro Minutes, where we'll be discussing what's happened in the week past in the market, some important information that our members need to know about the stocks in our universe, what investors can expect to see next week, and a couple of stocks to keep your eye on. Just a bit of housekeeping. Everything we discuss today is general advice only and has been prepared without taking into account your personal circumstances or objectives. And of course, past performance is no guarantee of future performance. So let's get into it with a quick wrap of what we saw in the markets last week. So we saw the markets rise 2.6% or 171 points to a 10-month high. Now, Rob, I know it was our first week back from Christmas and the New Year. Do you think this was the main contributor to the markets rising last week, or was there more at play? What do you think, Rob?
Yeah, look, we've actually seen the Georgia Senate runoff, which is actually creating this blue wave with Joe Biden being able to pass whatever kind of fiscal stimulus he wants. And the initial reaction from the market seems to be quite positive over that. So I think that was actually one of the main drivers for the market moving higher.
Okay, fantastic. Now, one of the big movers obviously was CBA, moving up 4.3% for the week. Now, all the big four banks actually did have quite a good week last week. Was this a chicken or the egg situation we had on our hands, or do you think, or was it something else? Was it a matter of the chicken moving the egg?
Yeah, look, it's hard to say. Look, the banks have been one of the laggards prior to a couple of months ago, which has probably held the index back. The banks have finally participated. We are actually quite bullish on the banks. We do believe the dividend that the banks will pay will actually be better than the market expects. So we're quite comfortable clients taking exposure to the banks. We'd actually prefer clients using an ETF called QFN run by BetaShares as opposed to trying to pick individual banks. There may be an instance where one of the top four banks doesn't necessarily follow through with the dividend expectations that we think. So QFN would be a much safer play for clients.
Okay, perfect. Thanks for that. And obviously, just a reminder, everyone, we will get to all of your questions in the Q&A at the end of the session. If it is urgent, feel free to jump onto the Maqro portal and type in your question into the chat window, and one of our account managers will respond straight away. So that's a brief wrap of what happened in the markets last week. Obviously, we're 2 days into this week, and we'll cover that a bit later on. But we have a couple of stocks in our universe that we want to cover over from last week. So let's press on and get into those straight away. The first company, BHP, probably one of the widest held stocks, not just by our clients, but by the market in general. What did we experience with BHP last week, Rob?
Yeah, so look, we had a research recommendation out on BHP. It actually hit our price target of $44, which returned a 21% return, including the franked dividend. We did see a substantial rally last week. That was basically caused by the aggressive commodity price increasing on iron ore. I think it's currently north of $1.60 per tonne. And that was on the basis of the increased stimulus hopes from the US, as I spoke about, with the Democrats capturing control of the Senate.
Okay, perfect. Second company, obviously Worley Parsons. I'm not sure if you hold this one yourself, Rob. I definitely don't. But they had quite a bit of negative news coming out before Christmas. So still a company we're recommending. But what did we see last week from Worley?
Yeah, so look, similar to BHP, there were stimulus hopes and a recovering energy sector prompted strong performance last week. It was up about 10%. What we do know about Worley Parsons is it's also exposed to the renewable energy projects, which would also benefit from Biden's policies on green energy, given that Worley Parsons have about 56% of their revenue coming out of the US. The negative aspect to Worley Parsons at this stage is surrounding the CFO retirement in December. So once they put that behind them by deciding on who the new CFO is, it should be very positive for the stock.
Okay, perfect. And to answer my previous question, you don't actually hold any of that yourself, do you, Rob?
No, mate, no personal exposure.
Perfect. And finally, for the stocks we're going to cover from last week, MP1, another one of our current investments. Now, last week it saw a 9% decline No price sensitive announcements. Is there anything members need to know or need to be worried about? What are your insights there?
No, look, I don't think there's anything company specific that people need to be worrying about. We're viewing the movement in the share price for MP1 to be largely systemic. Basically, we are seeing that there's ongoing pressure in the US tech sector. Potentially the antitrust reforms from Biden's administration. We do know that MP1 have about 34% of their revenue generated from the US, so it seems to us as though they're caught up in that systemic risk that's going on and the unwinding of that risk.
Okay, fantastic. Well, that's basically the stocks that we think our members need to know about from last week. In a minute, we're going to go through quickly what our members can expect from the week ahead and a couple more companies to keep their eye on. So on to the week ahead, and now what Maqro members can expect in the week to come. We have a couple of key pieces of economic data coming out next week and this week, obviously, as well. So, Rob, what might affect the direction of the market in the coming week, do you think?
Yeah, okay. So if we start with next Monday, the 18th of January, we've got the release of China GDP figures. Now, global equity fund managers are likely to be tracking this to gauge the relative attractiveness of Chinese economy. Obviously we've had quite a severe impact across all economies during 2020.
Definitely.
However, it is expected that the Chinese economy will be the only country to have actually grown during 2020. So all eyes are on that. Next Thursday, the 21st, we're also seeing the release of Australian unemployment figures. The numbers are expected to remain around about the 7% unemployment level. We are going to see seasonal job hiring in December, and that could provide an upside surprise. Also, the weekly decline in Woodside Petroleum and Santos should also report on its fourth quarter activities later on that day as well. And lastly, we've got the services and manufacturing PMI. That's going to be released next Friday, the 22nd, and that should provide some insight into the progress of the domestic economy.
Okay, fantastic. And for your clients, Rob, are you going to make any drastic changes to portfolios in light of this news, do you think, or are you going to keep it ad hoc at this point in time?
Yeah, look, we are hopeful that we might get a bit of a cooling off in the market and a bit of a retracement, in which case we'd be looking to take some exposure going along the market, ideally trying to remove as much company-specific exposure as possible, maybe using an ETF that invests in the broader market. Having said that, there's some technical signs to suggest that maybe we don't get the magnitude of the pullback that we were looking for. So as soon as we get a signal on the technicals to suggest that other institutions are stepping in and buying the market, we'll be instructing clients to do likewise.
Fantastic. And I know Maqro does have a couple of ETFs that mimic the market on recommendation at the moment.
Mm-hmm.
We'll leave that be for the moment, but perhaps they could get onto the portal and take a look at those to see exactly what vehicles they can use to get the market exposure at the moment.
Yeah, absolutely. Look, I think there's a couple of no-brainer recommendations that we've put out there that for long-term investors carries significantly reduced downside exposure relative to company-specific investments. So yeah, by all means, they should jump on the portal and check it out. Fantastic.
Well, the question on everyone's mind is what stocks we're looking at next week. So, Rob, if you don't mind, we're going to go through a couple of those names at the moment that we've got on our radar, and especially what you've got for your clients and what the Maqro universe can expect. So. The first company, one of our new recommendations, ALQ, was released as a recommendation this week to Maqro members. Give us a quick rundown on the business and why members should take a look at it. Not necessarily a buy, but why you think they should actually keep their eye on it.
Yeah, so the ticker code's ALQ, the company name's actually ALS, just to try and confuse people. Look, it provides testing services for laboratories, miners, industrial companies and governments. It's an elevated commodity capex in the next 12 months, should provide an increase in volume for its commodity division. Basically, the way in which you want to look at it is that these elevated commodity prices are going to lead miners to do more exploration. That exploration of tenements will see an increased number of assays go to laboratories for testing, and that's where these guys get involved. They'll be running those testings. That'll see an increase in their revenues, and that should obviously flow straight through to the bottom line.
Okay, fantastic. Second company, another one we're going to go over right now is another new recommendation this week. HLS, Rob, thoughts?
Yeah, so some of our older investors might recognise that this is previously known as Ramsay Healthcare. HLS provides pathology, imaging services in day hospitals. Whilst we're looking for a recovery in the COVID landscape, and that would definitely benefit HLS's non-COVID revenues, such as elective surgeries and diagnostic imaging. We are seeing that an elevated testing environment in the meantime would actually also support HLS's pathology division. So yeah, could be quite beneficial.
Fantastic. Good to know that the ticker code is now HLS and not RMC, as everyone has known it to be.
That's
So
right.
important information for the members to take away from that. Finally, for this week, OZL, been a recommendation of ours for some time. The analyst team likes it this week. They've said we need to take a look at it. So why should members be taking a look at this stock this week, Rob, do you think?
Yeah, so look, Oz Minerals is actually one of the highest quality copper producers. The copper's thesis this year is actually fairly bullish, driven by increased global infrastructure spending and subdued supply, with a low number of copper miners explored and developed this decade. The larger thought is that one of the 101 plays that governments do when they're trying to avoid recession is to spend big in infrastructure, and so infrastructure spend comes with a lot of demand on copper. So we should be seeing that from all the global economies, or the developed global economies. So copper is likely to have some tailwinds for some time to come.
Okay, fantastic. Thanks for that, Rob. Now, remember, if you haven't received these latest recommendations, jump onto the portal. Obviously all the recommendations and the reports are housed there. You can jump onto the portal anytime and adjust your settings on how these recommendations are delivered to you, whether it be text message, email, or via push notification if you've downloaded the Maqro search app. Better yet, reach out to your account manager and make sure you're receiving everything you need, and they would be happy to help you with anything product related. So, on to the Q&A. We actually have run out of time today, so we won't be able to go into too much at the moment, but we have had one question pop up quite a bit, which is if I haven't sold BHP, I know a lot of our investor base are holding it and have been holding it for some time, but should I keep holding on to BHP at this point in time?
Yeah, so interesting question. So look, BHP is probably fully priced at the moment based off the current iron ore prices. What we can say though is iron ore prices are stretched at this point in time. They're stretched on a couple of fundamental reasons. Number one is the problems coming out of the Vale mine over in Brazil. They did have a COVID incident which shut their mine down for 7 days. We do know that the Chinese are also buying a large amount of iron ore from Kazakhstan, I believe. The quality of iron ore there isn't necessarily in line with what we've got here in Australia, so they're having to buy more iron ore in order to support their steel production, which they've already had data points coming out saying that that's on the rise. So those things have probably pushed the iron ore price to stretched valuations in the short term. So if you think that iron ore prices are going to peel off, then you could quite easily look to trim out of your BHP position. That being said, we do believe the dividend that BHP deliver will be better than expected. So I guess it all depends. If you wanted to play a shorter, medium-term play before reporting season, by all means trim out of it and look to buy it in at slightly lower prices on a pullback on the iron ore price. But if you're one of those investors that really wants to get the dividend and is dividend focused and you don't mind riding a bit of volatility, then we'd suggest that the February reporting season will give you a pleasant, unexpected dividend from BHP.
Perfect. And we've got some obviously reporting seasons coming up, so we expect quite a bit of insight on not just our universe, but also a lot of stocks that we're going to be covering as to whether they're going to outperform or miss expectation coming into their reports. So for all our members there, a couple of stocks to keep your eye on. Now, if you need more clarity, feel free to jump into that chat window, obviously, and send your questions through. An advisor or an account manager would be glad to get back to you as soon as possible to make sure you've got the most information that you need to be able to make the right investment decision. So we're out of time, unfortunately. That's our macro minutes for today. Rob, thanks for joining me.
My pleasure, Jim. Thanks for having me.
Now, if we didn't get to your question, or if you want any further clarification on what we just spoke about this week, please head to the portal, speak to us on the chat, or reach out to your account manager, and we'll get back to you as soon as we can. Thanks again, everyone. My name's Tim, and happy investing for another week.